Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your financial market update for this Tuesday, the 8th of August, 2017. We're about 4:17 p.m. Central Daylight Time. We ended up with the loss today in the Dow. Wow, 10-day rally ends. It all has to do at the end of the day with news that broke out of the Washington Post concerning North Korea's ability now to arm a nuclear warhead inside of an ICBM missile and deliver it. And while we have been told, oh, they're years away, the news is they haven't. And now the question is, according to the reports from the defense committees, and there's, I think, 17 agencies that make that up, they could have as much as 60 of these weapons ready to go. Now, I don't know how many missiles they have, but this changes the scope of everything, and it scared everyone. So what it did is, while the gold market finished at 1262.60, the last trade of the day was 1266.50. Stock indices were breaking right on through, and they were a bit lower than this actually at the end of the day. At least I thought they were, so it doesn't matter. That's where they settled. Dollar index, a bit of a bid. The yen was all over the board today, and I mean it was all over the board. It's only a 50 or 60 point range, but it was everywhere. The news that's coming in from the Energy Department and the news that we saw from API today is certainly not bullish on the crude. The EIA is only looking now for prices in 2018 to average near $50 a barrel on WTI crude, $52 in Brent. That's not a big bull market. On the other hand, it offers some support. But being here into this $49 range tells me that the market's at the top end of a trade range, if the EIA is right. OPEC, we have not seen their final announcement as the meeting has ended. We'll find out what they've gotten, and we know that they were discussing overproduction. In other words, Iraq, UAE, the United Arab Immigrants, Malaysia, they were talking Kurdistan. I think it was Kurdistan, but it might have been a different country. I forgot which one that is. They're not meeting their cuts in production that they wanted to see. That's going to weigh on everybody, and it's going to get interesting right here. So summer doldrums, yeah, but it all picked up at the end of the day. Now, on the chart itself, you didn't do any damage. For the week, though, you're pretty flat. You're up 0.75, 3 ticks for the week, so not much movement there. What you did get, any way you want to look at it on the chart, is you had a key reversal day and outside day down. It's both. And the market did close under the day's opener. It fits into all the technical parts that calls for more of a correction to take place. You will have, as you know, and I try to teach that to you here, what I would call a bear trap if today's high, which is 24.8850, is taken out either on Wednesday or Thursday. I don't care after Friday, but if those were taken out, you'd have a very bullish situation. So right now, you've got something of a top action in there for a day. If the market can take out 24.63 1/4, you would then have a pattern of a higher high and a lower low. It would be the first time in a while that we've lost the trend, but so what? I want to come back to this. We had that happen right here. And this, so you'll know, was the same. It was an all-time high, outside day down, and it took a while, but within 7-8 days, we went through that high. So until we see a correction that has legs, my point is, don't play for it to have legs. Treat it as you would any other trade. So as I'm looking at this, I'm looking at also where the market stopped on the break. I want you to look at the 18-day average of closes, how often markets make a run there to figure out what to do next. That is still going on. Where did the market stop? Let's go back. Here we are on Monday, right? Here we are today. The market gets up, hits the upper Bollinger Band, and tossed right back down from it. Any way you want to cut it, that's what happened. Now, The trend is still up because you've still got the pattern of higher lows, higher highs. The bias is up because the market is over the 18-day average of closes, but momentum is down, and you've hit the 18-day average, which when you lost the embedded reading really back here. That's what the trade was calling for. It just took time to do it. And frankly, if you take a look at when you lost the embedded reading, you hit the 18-day average, but at a higher price than you were at that point in time. So while it hit the rule, I don't think anybody would have made money on a trade like that. In the NASDAQ, you still have momentum pointing down. You've got the pattern of higher lows, higher highs, and just like in the S&P, you went up today, hit the upper Bollinger Band, and bang, you just turned right around and went back down. The 18-day average is 59.0560, and you hit 59.0750 late in the day. So you can see the break there. The Dow has been the strongest, but it too has an outside day down. It still has the embedded reading. This one's the one that's been the strongest. You would expect it to act the strongest still because of the embedded reading. You got to watch 21,928. If that is taken out, could be a sign that the market really is going to get more of a correction. But on that correction, the 18-day average is the overall goal, and that could be a 300-point break in the market overall. In the Russell, the market came back up, challenged the area of the 18-day average of closes. It missed it by 1 full point, and then the market closed lower. It is oversold. It is in a downtrend, and the 18-day average is acting just as it should. It's a restraint barrier, or on the way down, a support barrier. The VIX, a big move to the upside. Now, it's closed over the upper Bollinger Band. It got stymied, if you will, against the 100-day average, but momentum shot up today. Also, an outside day up. Key reversal. There's so many things you can call a day like today, but I'm just going to call it a outside day up until today's lows taken out. While you could rally, each of the big rallies that we've had so far have faltered in a 48-hour period or so. So be aware of that. The market seems to be able to shake off any bad news. In the bond market, you've got an outside day down. So you now have lower highs, lower lows. Momentum is pointing down. However, prices did close over the 18-day average of closes. Therefore, the bias is up. You are not in a downtrend, as I would define them, with everything together. The swing line is down, but the bias is up and momentum's down. In the 10-year notes, we have a settlement at 126.05, which is right above the 18-day average. It's begging to go into a downtrend, is another way to look at it. The last break low in the market was 125.29, and we'll see if that market can get through it, which was also today's low. If it does, I'm going to assume prices will make a run for wherever the Bollinger Band and the 100-day averages come in tomorrow. Doesn't mean it has to, but that would be a downside target if the market wants to fall. On the way up, the dollar went to what number? You tell me what the 18-day average is, 93.66. Look at today's high, 93.77. So you've got the trend up because the swing line has got higher lows and higher highs. The bias is still down because you're under the 18-day average. Momentum has been pointing up, and it lost its embedded reading back over here, right on this day, which was last Friday, and that was calling for a challenge of the 18-day average. Instead, the market backed off. Yesterday, it made a run, hit that. Well, that's today. It hit that today. I keep saying yesterday because I'm ready for the markets to reopen, and we'll be into tomorrow's trade. In the euro currency, flip-flop. It had an outside day down, went to what number? Take a look. The 18-day average of closes is 117.23. You didn't make it. You got to 117.39. We'll see if the market gets any follow-through tonight and goes to that number to figure out what to do. But the trend in the market is not there. The swing line is down, but you're closed over the 18-day average, and momentum is down. And when you lost the embedded reading, it says price and the 18-day average are going to come together. I still think they are, so I'm looking for that to happen. Aussie dollar, the Aussie dollar is now oversold. You see the reading here of 29.83. So the trend finally got down enough, and the battleground is going to be the 18-day average. But because it's oversold, it's already seen enough of the break that you got to wonder what's going on. China's trade data today didn't do this market any favors because as much as they do business, China and Australia, the imports and exports were total down from China, both numbers. Therefore, not as much demand for their products at this point. Japanese yen got a bid late in the day, a safe haven bid, but you got to question losing the embedded reading. Prices normally go back to the 18-day average. A positive development that could happen here is the 18-day average getting over the 100-day. That'd be a bullish crossover if prices can stay over everything, but the overbought condition, that keeps you away sometimes from these markets. On OPEC, you can see how the market's acting. The market's still got a pattern of lower highs, lower lows. Now, the API number came out with, I think, a 7.8 million barrel decline. That's pretty good. However, when you look at gasoline, you went up a little and down a little. In the distillates, you're not getting the draws that you need out of those two products, and I think that weighed on the market. We're waiting for the OPEC statement, and remember, at 9:30 in the morning, you get the Department of Energy's report, and they're only looking for a 2.5 million barrel decline in crude stocks. So we'll see what happens. Cushing, by the way, saw an increase of about 300,000 barrels. Gasoline worked its way down. Now, if you take a look at the low, 159.56. Here's an embedded reading. You're going right through there. The reading is still there. It gets lost on last Thursday. When it gets lost, what it puts into play is the potential now for price and the 18-day average to come back together. You also had a bullish crossover. The question is, are you going to go up and make a new high? The market goes up on Friday, comes down yesterday, hasn't hit this number, and bang, you're down. So you hit the 18-day average today. You've satisfied this part of it. Now what's still left open is the market with the bullish crossover going to challenge these highs or not? That becomes the open item. In terms of satisfying the move down, that's already occurred. So let's talk, if we could, about the offerings that we have, because they're going to be so important to you. In a nutshell, what we offer is so simple. At the Linn Group, we have our own writers. If you're an ethanol trader, I'm telling you, butter, grains. You've got a huge grain report coming out this Thursday morning at 11 in the morning. We have staff all over this. They don't just report the numbers. They give you the insight as to what's going on. Today I was in a meeting, and all of a sudden I was hearing how the cutout values were going in the pork as they broke in, and we had to know what the bellies were doing, some of the ham cutouts and so on. I mean, we're a real commodity firm. We're not just guys that sit around charts. This is all written about in detail. So if you're lacking, because so many people just want, hey, let me trade for near nothing. But where do you get your research? Well, it's firms like us. You get to see it, but then you have to open an account with us or do something to get it. Maybe you buy it. How do you get it? You give us a call at 866-973-2077. You can also go to our website at www.iraepstein.com. You can click up here at any time. You'll see an icon. If you're watching me on YouTube, that'll open up a form, or underneath us, it'll say right there, click here for Ira's free offers, and away you go. You can pick the categories you want. You're not going to see that elsewhere. At least see what you're missing, and you'll understand why we fit in so well as a boutique firm that does one-on-one hand-holding with our customers, a lot of research. The old way you do business, you talk to people. You can also trade online, of course, but a lot of people want to talk to me and our brokers. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.